Hello everyone and welcome. Before we begin, please take a moment to subscribe to our channel, AI Finance Insider, for clear, data-driven insights on markets, crypto, and the future of finance. Your support helps us continue delivering high-quality analysis. My name is Hafiz Beg, and today I'll be guiding you through a comprehensive deep dive into Bitcoin, the world's leading digital asset. This report focuses on Bitcoin's market position in early 2026, including price action, institutional adoption, regulatory developments, technical indicators, on-chain behavior, and long-term outlook. This content is strictly for educational purposes and should not be considered financial advice. Bitcoin remains one of the most closely watched assets in global financial markets. As of early February 2026, Bitcoin has experienced notable volatility, marked by sharp price swings and consistently high trading volume. Recent market activity shows Bitcoin trading in the upper $70,000 range, reflecting strong participation from both retail traders and institutional investors. High trading volume during volatile periods typically signals active positioning rather than market exhaustion. This indicates that buyers and sellers remain highly engaged, responding to macroeconomic signals, institutional flows, and regulatory developments. Volatility alone does not signal weakness. Instead, it reflects Bitcoin's role as a liquid, globally traded asset reacting to real-time information. From a price structure perspective, several technical levels remain critical. The region between approximately $73,000 and $70,000 has emerged as a key support zone. This area has historically absorbed selling pressure and acted as a pivot for price reversals. Below this zone, the $60,000 level remains a major psychological threshold closely monitored by market participants. Psychological price levels attract attention because they influence trader behavior and risk perception. A decisive break below these levels could trigger increased selling pressure through stop-loss orders and risk-off sentiment. On the other hand, strong defense of these zones supports the case for renewed upside momentum. Beyond short-term price movements, a deeper structural shift is taking place. Bitcoin has transitioned from a primarily retail-driven speculative asset into a macro-level financial instrument. This transformation has been driven largely by institutional adoption. Major asset managers, hedge funds, and corporations now treat Bitcoin as a strategic portfolio allocation. The growth of spot Bitcoin exchange-traded products has accelerated this shift by providing regulated access to Bitcoin exposure. These products significantly reduce friction for institutions entering the market. When ETFs accumulate Bitcoin, they remove supply from open markets and place it into long-term custody. This reduction in circulating supply can amplify price movements when demand remains steady or increases. As a result, ETF inflows and outflows have become one of the most influential forces in Bitcoin price behavior. Institutional participants typically operate with longer time horizons and larger capital allocations than retail traders. Their involvement introduces a different market dynamic, where trends are driven more by allocation strategies than by short-term speculation. Bitcoin's price is now increasingly influenced by macro positioning and balance sheet decisions. Historically, Bitcoin's 4-year halving cycle played a dominant role in price discovery. While halvings remain structurally important, their impact is now moderated by institutional demand and broader liquidity conditions. Bitcoin is evolving from a purely cyclical asset into a macro-responsive one. This evolution means macroeconomic factors such as interest rates, inflation expectations, and global liquidity now exert greater influence on Bitcoin's price. As central banks adjust policy and investors reassess risk exposure, Bitcoin responds alongside traditional assets. Another critical factor shaping Bitcoin's outlook in 2026 is regulation. The regulatory environment surrounding digital assets continues to mature, particularly in the United States. Regulatory clarity is essential for institutions that require defined legal frameworks before deploying large amounts of capital. Efforts to harmonize oversight and clarify regulatory responsibilities aim to reduce uncertainty. Legislative initiatives focused on defining agency boundaries represent progress toward a more predictable crypto market environment. This predictability supports innovation, product development, and institutional confidence. Clear regulation also enables expansion of custody services, derivatives markets, and tokenized financial products. As these markets mature, Bitcoin becomes more deeply integrated into the global financial system. From a technical analysis perspective, Bitcoin currently shows mixed signals. Momentum indicators suggest short-term strength has cooled following recent advances. However, price remains supportive of key trend levels, indicating broader structure remained intact. Technical indicators are most effective when combined with volume and on-chain analysis. No single metric should be used in isolation. Confirmation across multiple data points improves reliability and reduces false signals. On-chain data provides valuable insight into large holder behavior. Recent activity indicates accumulation by major addresses during price pullbacks. This suggests long-term positioning rather than panic selling. Large holders typically operate with extended time horizons and are less influenced by short-term volatility. Their accumulation patterns often precede periods of stabilization or trend continuation. Exchange reserve data also remains important to monitor. Declining Bitcoin balances on exchanges generally indicate reduced immediate selling pressure. Rising exchange balances, by contrast, can signal increased risk of volatility. These metrics help contextualize price movements beyond charts alone. Bitcoin's network fundamentals remain strong. Hash rate continues near historical highs, reflecting robust miner participation and network security. A strong hash rate enhances resistance to attacks and reinforces confidence in the system. Mining difficulty adjustments reflect normal economic rebalancing within the network. These adjustments demonstrate Bitcoin's ability to self-regulate based on participation and profitability. Miner holding and selling behavior also affects short-term supply dynamics. Despite strong fundamentals, risks remain. Regulatory surprises, macroeconomic shocks, and sudden liquidity events can all impact price sharply. Leverage and crowded positioning can amplify these moves. At the same time, several potential catalysts support a constructive outlook. Continued ETF inflows, broader institutional adoption, favorable regulation, and technological integration all represent upside drivers. Innovation and expanding use cases may further strengthen Bitcoin's long-term value. It is important to consider multiple scenarios. In a bearish case, adverse conditions could drive Bitcoin toward long-term support levels. In a base case, price may consolidate as supply and demand reach temporary balance. In a bullish scenario, sustained institutional demand and supportive macro conditions could drive new long-term highs. Such outcomes will likely be driven by strategic allocation rather than speculation. Regardless of outlook, disciplined risk management is essential. Position sizing, realistic expectations, and secure custody practices are critical. Long-term participants should understand the trade-offs between self-custody and third-party solutions. Bitcoin's role in global finance continues to evolve. What began as an experimental digital currency has matured into a recognized asset class. Its integration into institutional portfolios marks a defining chapter in its history. Volatility will remain, but underlying fundamentals continue to strengthen. Adoption, security, and regulatory progress point toward increasing legitimacy over time. In summary, Bitcoin in early 2026 sits at the intersection of innovation and institutionalization. Price action reflects both uncertainty and opportunity. Institutional flows, regulation, network strength, and macro conditions now shape its future. Once again, this content is for educational purposes only and is not financial advice. Always conduct your own research before making investment decisions. Thank you for listening. This is Hafiz Beg, and you're watching AI Finance Insider. If you found this analysis valuable, please subscribe to the channel and stay tuned for more professional market insights.